Welcome to Pimpy's Investment Chat, where we keep investment talk simple. And here's your host, Pimpy.
What is going on out there, peeps? Oh yeah, panic. People are panicking left and right, mostly over crypto. But I tell people, hang tight, people. Did we not talk about this day coming? We would see this. We would start to see a drop in the market, drop in cryptos, drop in gold and silver, and then all of a sudden, it would be the survival of the fittest. Understand that all these markets are being controlled, they're being manipulated. But we are going to go over quickly what is happening at the moment and what you can expect afterwards. Before we get started, do me a favor, hit the thumbs up button. If you're not a subscriber, please do so, because when you do, it helps out the channel, and I surely do appreciate it. Oh yeah, you definitely want gold and silver. You'll see why here in a moment. So when you go to buy your gold and silver, go to our friends over at Money Metals Exchange. The link is down below in the description. If you're a first-time buyer and you spend more than $100, use promo code Pimpy, P-I-M-P-Y, and you'll get a free half ounce of silver. Ah, yes, people are hitting the panic button, that's for sure. And I can understand why. Let's take a quick look at cryptos continuing to bleed. Bitcoin's at 34,000. It's probably going to drop below there. Let's see. $34,011.39. Ethereum's at 2,523. XRP, I don't know where it's going, but it's down to 56 cents. Solana, $74.95. Cardano's down to 74 cents. Dogecoin's down to 12 cents. You know, here's the thing about Dogecoin and Shiba. They go down too, but not by very much. I mean very little, as a matter of fact. That's the interesting thing about these so-called meme coins. Dogecoin's sitting at 12 cents. Avalanche at $51.29. Polkadot's at $13.21. Shiba's at 4018. Polygon's at 97 cents. And Crypto.com's dropped all the way down to 25 cents. So I got people going back and forth. Some people in the group making fun of each other's downfalls in their investments. Talking about, I told you to stay in this one, I told you to stay in that one. It's like, really? Come on, people. We're on the same team. It's cool to be diversified, but there were a lot of things that I warned you that were coming. All these markets are manipulated. Not to stress out. To expect this kind of drop. Not to panic. People holding on to gold and silver, if you're looking at this as an investment, then you're looking at it wrong. Gold and silver, although they're labeled as commodities, are not commodities. They're actually money. Yes, money. So what we're watching is the store of value, the protection of your purchasing power. I did many examples of showing you that the amount of gold needed to buy a house in 1932, the same number of ounces could buy you a house today. That's protecting your purchasing power. But I do understand why people are panicking. Let's go over a couple things. If we take a look at Bitcoin from its highest point, which hit back in when? November the 7th of 2021. You can see that it was at $67,566.83. Right now it's at $33,932.44. As you can see, since November of 2021, Bitcoin has lost almost 50% of its value. So when people are going, Bitcoin's the next gold. No, it's not. If Bitcoin is a storage of wealth, that's a huge loss to your wealth. But that doesn't mean panic and sell. Look for cryptocurrencies to rebound, not anytime soon. So if you've already bought when it was way up there, and that goes for any of the cryptos, just hang tight. So the whole battle between which one's a store of wealth, which one's better to have your money in, it certainly is not Bitcoin. So yeah, Bitcoin, since its highest point, November 7th, 2021, it has lost 49.7%, almost 50% of its value. Yikes. If we look at Ethereum for the same time, 11/7/2021, when it was at its highest peak, $4,812.09. So since its highest peak in November the 7th to where we are today, Ethereum has lost 47.8% of its value, almost 50% of its value as well. That's from their highest points just a short time ago on November the 7th, 2021. As you can imagine, most of the cryptos are somewhere in the same ballpark. But when it comes to Dogecoin and Shiba, for some reason, they managed to maintain a big portion of their value. They haven't dropped by very much. So people want to see the same time frame for gold and silver. Let's take a look. So on November 7th, 2021, gold was at $1,827.40. From November the 7th, 2021 to where we are today, gold has actually gained $55.40. So that's somewhere in the neighborhood of about, a 3% increase. Not too bad. But if we go to its highest point, like we did with Bitcoin and Ethereum, which was on March the 7th of this year, gold hit $2,040.10. Since its highest point in March, it has lost $157.30. In other words, it's lost approximately 8% of its value. Not 50%, not 47%, not 48%, nothing. No, barely 8% of its overall value since its highest point of March of this year. If we take a look at silver, November 7th, 2021, silver was at $24.54. Since November the 7th, where Bitcoin and Ethereum were at their highest points, silver is down $2.17 per ounce. It has lost almost 9% of its value since November the 7th. 9%. But if we look at its highest peak as well, which is March 7th, it was at $26.89. So since its highest peak on March the 7th of 2022, it has lost almost 17% of its value. Silver goes up and down like a sporadic kid high on sugar. I told you about that. It goes up very quickly, comes down very quickly, unlike gold, who takes their sweet but time going up and coming down. But as you make a comparison of the top cryptocurrencies versus gold and silver, you can tell that cryptos are not a store of wealth. A store of wealth, you would not be losing approximately 50% of your value. Since its highest point this year, silver has lost almost 17% of its value, where gold has lost about 8%. This is why I always tell people gold and silver, don't pay attention to the spot market value. It is heavily manipulated. And you're going to hear experts explain to you why it is, what's happening, and then what's going to happen once they finish doing what it is they're trying to do. And they're just about there. This is Al Sard. Listen to what he has to say about where our monies are going.
Well, first of all, I don't think that they will do this with silver. The logic behind the question is, of course, you've seen this in America before. We also had it in this country where the government turned around and said you can only hold 3 sovereigns or something. I wouldn't rule it out happening again. But the way to deal with it is to ensure that either you hang on to your gold and silver.
Yeah, the way he started off this interview, he just kind of seemed like he was halfway through a thought. So let me just get you caught up. He started off by saying he doesn't think they're going to do this to silver. But back in the olden days, what they did was they confiscated gold. They did it in Europe. They did it here. When he said they only allowed them to hold 3 sovereigns, that's their gold coins. Keep in mind, we did have gold confiscation. At least that's what they called it. I'm not sure why they call it a confiscation, because the government said you had to turn over your gold. They didn't go door to door taking people's precious metals. People turned over their gold, is what happened. He thinks this might happen again here shortly. But he's also saying, even if that happens, make sure that you have your gold and silver. You physically have it, you physically own it. Because if it's sitting in a bank deposit somewhere or any kind of safety deposit, anything like that, the government's just going to take it right from you. Any kind of company that is government linked, any kind of big bank, they will confiscate the gold right from you. For those of you who are holding precious metals over there at Money Metals, if any kind of action was taken like that by the government, Money Metals will have your metals sent out that very day just to keep you protected. So you don't have to worry about that. You'll be notified that your metals are on your way, and it's for your own protection so that it doesn't get confiscated. You then have possession of your gold and silver. You need to figure out what you need to do with this. So you should start planning now, just in case. You should always be 5 steps ahead. So what happens if the government goes for confiscation? What do you do? Well, if it's sitting in a vault over there with Money Metals, you can expect it to get to you really quick. So what happens once you get that? What do you do? How do you protect yourself? This is what Alisard is talking about. And the only way to protect it from confiscation is you better have it and you better own it. And he makes a couple of other suggestions as well.
Well, I can't turn around and say that you should break the rules that the government then introduced. But one way around this is to store it in vaults which are beyond the jurisdiction of your government. And there are 2 jurisdictions you've got to bear in mind in this. One is the physical jurisdiction. In other words, if you're an American, you might look more favorably on storing them in a vault in Switzerland. And the other thing is to make sure that you don't store them in a vault which is owned and operated by an American corporation. So that's another thing that you ought to bear in mind. And I would say that that's, one of the things we do at Gold Money is...
Yeah, but see, keep in mind, he's talking about some individuals who have a very, very, very large amount. He's suggesting send it over to Switzerland. He's not talking people that have 10, 20,000 ounces of silver, 1,000, 2,000, 3,000 ounces of gold. He's talking about these people who literally have like millions and millions of dollars worth of gold and silver. Is what he's talking about. When he says he suggests you consider maybe sending it to Switzerland, although I wouldn't trust them neither at this moment. What's going on around the world is a really bad thing, and you can't trust nobody but yourself.
You're not going to necessarily stop your government from confiscating your gold, but you can make it just a bit more difficult for them to do so.
Let me reword that for him. You're not going to stop the government from attempting to confiscate your precious metals. They're going to try fear, threatening you. If they can get their hands on it from like a bank or a storage vault, they will. But they don't have the manpower or the technology to be going door to door, checking every room under your mattress and everything else. Get my drift? The reason why in the 30s they were so successful at so-called confiscation is because they convinced the American people that what they were doing was patriotic and was going to help your country, and a lot of people just voluntarily turned over their precious metals. Not everybody did that. A lot of people kept their precious metals.
General confidence indicators are high and market volatility is low, which both suppress demand for silver and gold. And yet, the fundamentals of the silver and gold thesis continue to improve. Sentiment indicators and technical are slowly building the case for a resurgence in gold's long-term rally, as noted by the 100-year Dow/gold ratio near all-time peaks and with the potential for a sharp mean reversion. There are good reasons for optimism related to silver and gold prices, as they appear poised to reflect broader inflationary pressures, but the bullish outlook isn't without risk. One of the biggest threats to hard assets next year would be a rising U.S. dollar index in anticipation of Federal Reserve monetary tightening. Some investors assume, wrongly, that a rising greenback on foreign currency exchanges spells doom for silver and gold. While it can be a headwind, there is also precedent for silver and gold to rally alongside a nominally strong dollar. To put dollar strength in perspective, this year it is up about 8% against a basket of foreign currencies. In reality, though the fiat currency has actually lost more purchasing power in this year than in any year since 1982. Inflation is almost certain to persist. The question for investors is how to ride the next wave of inflation.
Vested interest in the establishment, and by this I mean the bullion banks, is to see lower prices for bullion and silver so they can close their shorts. The short position in the swaps alone on COMEX, it has been in the region of sort of 40 to 45 billion dollars.
So do you see what he's saying? Right now they're manipulating gold and silver, driving the price of gold and silver down so that they can cover their short contracts. They're trying to do that as quickly as possible because they are exposed approximately $40 billion worth of metals they don't have. So they're trying to do their best to cover as many of these contracts as possible before the doo-doo hits the fan.
We're talking about huge amounts. I mean, average bank exposure in the swaps is probably in the region of $1.5 to $2 billion. I mean, this is serious stuff. So they don't want to see a rising price for gold. What they want to see is a falling price, and they can then close them off. So, and what we've seen recently is some success for the swaps because the level of open interest on COMEX has actually declined quite sharply from, off the top of my head, I think we got up close to 600,000 contracts, and now I think we're down to sort of 540, something like that. Maybe more to go.
See, so they're closing out their contracts. These are the contracts that have the COMEX exposed, LBMA exposed, these banks exposed. They're manipulating the value of gold and silver. It isn't going to last long because the demand is too high.
They don't understand that the true hedge from this situation is actually physical gold itself. I mean, what they do is they say, I mean, if you're a Keynesian, you say, well, look, hold on a minute. We're seeing interest rates rising, which basically means that the penalty of holding an asset which produces no income is increasing. And you want me to hold gold? Now this is an argument they would prefer to see because it drives down gold relative to the dollar. And if you're in the banking business, you say, whoopee, this is actually what we want. And so these are the dynamics behind what is actually happening. But the other thing I would say is I would associate with someone who's looking at gold and silver as an investment, true money, which actually should be hoarded. And the reason you hoard money is so that you spend it later because you're worried about everything else.
Gold and silver are real money. The US dollar has lost like 98% of its purchasing power, where gold and silver continue to hold on to their purchasing power. Many of you have seen me do this example before, so I'm going to do it one more time so that it makes sense. When I say that gold and silver, especially gold, holds on to its purchasing power, back in the 30s, the average cost of a single family house was $3,600. And gold was somewhere around, I think it was $32 an ounce. So this meant you would need 112.5 ounces of gold in order for you to buy that single family home back in the 30s. So 112.5 ounces of gold to buy a $3,600 single family home. So this is what I'm talking about when I say gold keeps its purchasing power. If you take that same 112.5 ounces of gold today and you multiply times, let's just do the spot market, you can see that same 112 ounces of gold can still buy you a single family home today, unless you live in New York or California, obviously. But $211,815. Gold is a true store of wealth.
The Silver Institute forecasts a supply deficit for the physical silver market in 2022. Analysts note that industrial demand is rising, especially on the green energy front, where the white metal is used in solar power and electric vehicle applications. Putting its monetary value aside, silver will be needed more than ever as an industrial commodity. Every smartphone and desktop and laptop computer may need silver. With the lightning speed at which companies release new phone models and the future rise of developing nations who want computers, we can see just how important silver is to the future of industry worldwide.
Alistar was actually predicting the fall of the European dollar, the euro. He says he'd be shocked if it was still around by the end of this year. The collapse of all the currencies around the world, this is a planned event. This is their way of trying to force us into the central bank digital currency and force you guys on the universal basic income. But let's continue on to why it is that gold and silver are so important.
Think about it logically. So what are we doing with the sanctions? So Biden and other leaders are telling Americans, hey, Russia's got gasoline that you need and food that you need, but you can't buy it from them anymore. We're not going to allow you to buy these goods from Russia. So you got to buy the goods someplace else. Well, now we have to pay more because now there's all this demand from, the other sellers. They have much higher prices now because we've eliminated all the supply that was coming from Russia. So Americans end up paying a lot more for those goods that the U.S. government won't let us buy from Russia. But now think about it from Russia's perspective. Russia still has all their oil. They still have all their food that's now way more valuable because we've caused the price to go up. And now they're able to sell either illegally on black markets or to other nations that are still trading with Russia. They're actually still able to sell their oil and their food. They just get a higher price for it than they were before. So Russia may be winning from the sanctions.
And that's exactly what's happening. You see, the United States thinks they're slick. What they're telling everybody is, hey, don't buy from Russia. Remember, Putin's a bad guy. Hey, be more than happy to pay for higher gas prices. That's our way of putting it to Putin. That's what the Democrats would have you think. But what these little sneaky are doing is this. You see, Russia is selling their food and their oil to other countries that they're allied with. Well, some of those allies we're actually allies with as well. So, although the United States isn't buying it directly from Russia, they still buy those products that come from Russia. They just do it through a middleman. This way, then, American people aren't hip to what's going on. So they're not truly boycotting everything Russia. They just buy it through a third party so that they can't be linked directly to buying it from Russia.
And it's Americans, it's Europeans who are losing. So I think that, like most things the government does, it typically backfires. Like when the government creates an anti-poverty program, you end up with more poverty, not less. And so by sanctioning Russia, we're probably going to end up helping Russia and hurting ourselves, especially by highlighting to the world the dangers of using the U.S. dollar as the reserve currency. And so we may have just hastened the demise of the dollar as the reserve currency, which means we accelerate the collapse of our own economy. Let's say because of the sanctions, a product that Russia was selling went from $1 to $3. And so now the market is $3 and it's really expensive. And now under the table, illegally, Russia says, hey, we'll sell you this stuff for $2, right? You can get it for a big discount to the $3. There are going to be people who will illegally buy that stuff because they're saving so much money paying $2. But at $2, Russia still gets double what they were getting before the sanctions. So Russia wins, and everybody else loses as a result of those sanctions. So, that's how I think this ultimately plays out. Last time I looked, the ruble was higher than it was when the war began and the sanctions were announced. Now, initially, there was about a 40% decline in the ruble, and President Biden was bragging about how much value the ruble lost. Well, the ruble has recovered all of that lost value and then some.
It's higher than it was prior to the invasion. So not only did they gain back what they lost, but they gained even more.
Now, the ruble is still a lot lower than it was a year ago. So it's not like we have a strong ruble, but it has strengthened recently. And I believe that that is a trend that's going to continue. And right now, the dollar has been very strong against a lot of other currencies, in particular the euro. Wasn't just a ruble. But I think that dollar strength is eventually going to reverse as well. I think the dollar is going to come under a lot of pressure when the markets realize that the Fed is bluffing about its ability to fight inflation, and that when the markets, figure that out, and the Fed is ultimately forced to reverse because of the weakness in the economy and the markets, I think the dollar is going to tank across the board, including against the ruble. And now that Putin has kind of fixed how much gold the Central Bank of Russia is willing to buy priced in rubles, if we see a very weak dollar in terms of rubles, that will put a lot of upward pressure on the price of gold because a lot of Russian banks will be buying gold that they can turn around and sell to the Russian government at a profit. And the strength in gold will also accelerate the decline of the dollar and feed the whole process.
Russia's smart. They're offering oil at a discount. Let's just say for simplicity, oil is going for $100 a barrel. Russia would be offering it at $75 a barrel. Countries would be saving, obviously, $25 a barrel. Many countries buy millions of barrels a day. That's a lot of money to save. Then what they're doing is they're going to their central bank saying, hey, we're willing to buy gold. We're willing to buy it above the market value. So let's just say, for simplistic sakes, let's just say that gold sells for $2,000 an ounce. Russia is saying that they're willing to pay $2,050 an ounce. So you get $50 more per ounce above what the market is. So that's where the pressure comes from. They're selling their oil discounted. That's driving everybody over to them. And the demand for Russian oil is going to be high. Then they're taking the money from the oil sales, going to the central bank, and having them purchase gold on behalf of Russia. And they're willing to pay above the market value. So that means they're going to take that extra money and continue to buy more gold so that they can sell it to the Russian government at a higher value. People are going to keep going over to buy the oil because the oil is discounted to the point where it's hard for them to resist. See how that works? And since the Russians are forcing people to use the ruble in order to purchase the oil, the value of the ruble is only going to strengthen and continue to go up. As the decline in the US dollar, as the American dollar is dying, the same with the euro, they start to lose their purchasing power and their value continues to decline, especially against currencies that are strengthening, like the Russian ruble.
Well, I look at gold as money, as a store of value, not as an investment per se, like you invest in stocks or real estate. You hold on to gold to preserve value because it doesn't throw off a return.
See, that's exactly what I was talking about earlier. That was Elisard was saying the same thing. Now this is Peter Schiff telling you, don't look at gold and silver as an investment. Look at it as a store of value. Look at it as actual money.
Like stocks.
Right.
Or real estate do. People don't really understand the degree to which the American economy is dependent on the dollar and its role as the reserve currency. You've often heard the U.S. economy described as a service sector economy, right? We're all about services. Well, where do we get all the stuff then? Because we certainly consume a lot of stuff. Americans are, incredible shoppers. I mean, we have an insatiable appetite to buy stuff, right? But if we have a service sector economy, where's all this stuff coming from that we're buying? Well, it's coming from China and other countries. Well, how do we pay for it? We don't. We just print money. You see, under a normal economy, if we didn't have the reserve currency, we would either have to produce stuff for ourselves or produce stuff for our trading partners to trade with them for the stuff they produce. But we don't have to produce anything. We just print money. And the rest of the world takes the money we print for the stuff they make. And so we have a much higher standard of living because we get to consume all this stuff that we didn't have to produce. So we didn't really pay for it. But when the dollar...
Now you understand why it is that the globalists or the New World Order, or whatever you want to call them, were fighting Trump so hard. Trump kept trying to bring the manufacturing jobs back into the United States so that America could start producing again. Our governments had been selling us out by allowing our corporations to go overseas where there's cheaper labor. But now we don't produce anything. And now we're going to be really screwed if the market crashes. That's why it was important for Trump to stay in a second term so that he could continue bringing manufacturer companies here to protect us and buffer us from this worldwide crash.
If the dollar was no longer the reserve currency, is American spending would implode. Consumption would collapse because we'd have nothing to buy. And so our entire GDP would implode. We'd have a massive recession because Americans wouldn't be buying anything because we couldn't afford anything, and all the shelves would be empty because foreigners wouldn't be sending us the stuff that they produce, and we don't have the capacity to produce it for ourselves.
Hope you guys saw the video that I put out, and it shows you what they're doing to food processing plants around the world. They're magically all catching on fire. And they're going around to where people have livestock and killing the livestock, claiming that these animals have these new diseases that never been heard of. So they're trying to starve us is what they're doing, and they're going to do it successfully. If you don't know how to grow your own food, I suggest you learn how to at least grow potatoes.
In fact, as long as the dollar is the reserve currency, we have no incentive to be fiscally responsible. So that's the problem here. We're going to keep on doing this until there's a crash, because the only thing that will stop it is a crash. It was taxes and regulations that made the U.S. uncompetitive relative to the rest of the world.
When Trump was in office, he tried to cut all the regulations. You see, what happens is you get these people, they buddy up to politicians, these big corporations, and they keep adding more regulations, claiming it's to help the environment or protect you. That's not what's happening. That keeps smaller businesses and medium-sized businesses from developing because they can't afford to go through all these rules and regulations and pay all these fees all the time. It's too costly. This allows the bigger corporations to get bigger and they start to run a monopoly, and they provide all the services and products that you need, like a one-stop shop. Sounds convenient, but it then also allows them to manipulate the prices, which is what we don't want. Kudos to Trump again. As much as you want to hate him, he did bring manufacturing back here, but he wanted more, and he did try to cut a lot of these regulations.
And foreigners don't want to, play this game anymore. They have too many dollars. They have too many U.S. treasuries, and we're making that apparent by, flexing our muscles with these sanctions. I think that we've reached the end of the road here on this game. And, when we experience the true consequences of what's happened, because, we've been living on credit cards and borrowed money and imported goods, and we don't realize how drastically things are going to change for the worse when we can't rely on those things anymore. Those lifelines are going to be gone.
So there you have it. Why it is you should be invested into gold and silver, and why it is that you should be holding it. If you don't have it in your possession, you don't own it. It can be confiscated. So be very, very cautious about that. For those of you who have your stuff stored at Money Metals, don't worry. Like I said, if it comes to confiscation, they will have your metals out that day. So for the past 100 years or so, gold has kept its purchasing power, unlike the US dollar. We now know that Bitcoin and Ethereum or any other cryptocurrencies are not a storage of wealth. Bitcoin and Ethereum have lost almost 50% of their overall value just since November. And although gold and silver has gone down, like I said, they'll go down along with the stock market. They'll go down just like cryptocurrencies, but not as much, and they will rebound much, much quicker. So hopefully a lot of you who were listening to my videos when I had suggested that you consider taking some of your retirement and moving it over to gold and silver, hopefully you've done that, because now I got people telling me, Pimpy, I've lost almost 40-50% already in my IRAs and my 401ks. That's just some people. Some people are experiencing somewhere between 25 and 30% loss in their portfolios. Either way, that's still really large. And I'm hoping that you were able to protect your investments by buying gold and silver. And like I always suggest, when you go to buy your precious metals, go to Money Metals Exchange. All right? Anyways, that's it for now, you guys. Hit the thumbs up button. If you're not a subscriber, please do so, because when you do, it helps out the channel, and I surely do appreciate it. And I'll catch you later. I'm out.